Good morning, everyone. You are watching a live daily market outlook for Tuesday, 27th of March 2012, prepared by Windsor Brokers. The markets are in the consolidative mode, trading overnight after yesterday's strong moves caused by Fed's President Bernanke that hinted at possible further quantitative easing in U.S. is going to be the likely scenario. The U.S. economy needs to grow more quickly to bring the unemployment rate down further, Bernanke said yesterday. He defended the central bank's policy of very low interest rates, holding for a minimum, according to their expectations, until 2014. While he offered no indication that the Fed is keen to embark on a third round of bond purchases, Bernanke also made clear the central bank is in no rush to reverse course after responding aggressively to a deep recession. The jobless rate has dropped to 8.3% from 9.1% last summer, a move Bernanke said was somewhat out of sync with the rather modest pace of economic growth. He said decline could reflect an effort by businesses to recalibrate their payrolls after unusually heavy job cuts during the recession. If this is the case, he said the progress may stall. To the extent that this reversal has been complete, further significant improvements in the employment rate will likely require a more rapid expansion of production and demand from consumers and businesses, a process that can be supported by continued accommodative policies, Bernanke said yesterday to the National Association for Business Economics. The immediate reaction of the market was the dollar's fresh weakness that actually the dollar index dropped to close to 1 month low, holding this morning around the 79 zone, while the US stocks jumped higher, as well as euro and sterling that broke some significant barriers and they came out of the recent near-term range where the prices were congested for past 2 weeks, while the dollar Swiss lost traction and dipped under a very significant support at 90.70, still heading south. Currently, the markets are in a corrective, consolidative mode with no spectacular action in the opposite direction seen, as the possibilities of further extension of the yesterday's moves are quite likely. More of this we will see on the our technical part. Just to mention that gold remains well supported on the recent dollar's weakness, hitting levels close to $1,700 per ounce, our initial target and psychological barrier. And also more of this we will see on our technical part. From today's calendar already released, the German consumer's climate unexpectedly dropped today, while the expectation was for the result better than previous month release of 6, and today's forecast was 6.2. Unfortunately, the consumer climate showed that it's losing speed, and today's release came at 5.9. Further, from Germany, German import prices came slightly better than expected at 0.9. Today's release was 1% lower than the previous month release at 1.3%. From UK today, we have the realized sales monthly release due at 10 o'clock GMT. -4 is the forecast for today compared to -2 of the previous month release, showing that sales are going lower. From US at 1400 GMT, consumer confidence slight decrease is expected today. 70.3 is the consensus, compared to 70.8 of the previous release, and the Richmond Manufacturing Index due at the same time at 1400 GMT, again decrease to 18 compared to 20 release of the previous month. Ben Bernanke is due again to speak later in the afternoon at 16:45. GMT, and that would be all from today's economic indicators that are due to be released. Now we're going to take a look on the calendar, on the markets, and see the latest movements. As shown on the 4-hour chart, the euro-dollar broke above its recent congestion at 132.80, 133 zone. There was a previous high at 132.92 posted last Friday. Also 132.90 was the high of 8th of March 2012, and 133 was Fibonacci level 61.8%. That pair in its yesterday's surge of 158 zone, pardon, 131 and 90 zone, where the support was found, and it was a dip was contained by 55 days exponential moving average. A strong rally, higher surged through this important barrier, and extended gains so far to 133.66, clearing the initial barriers at 133.31 and 133.55, and testing basically the next one at 133.65, the 27th of February low. Currently, the current situation shows that the pair is has started correcting after initial consolidation within the narrow range during the Asian session. Started correction lower as the hourly studies were extended, and the RSI in the overbought zone now started pointing higher. The first barrier now comes under pressure is the 20 days moving average at 133.32 currently, ahead of a more significant support of previous strong resistance at 133.00, 132.80 zone. That should ideally, where is also the 20 days exponential moving average on the 4-hour chart, that ideally should contain the dips in order to immediately resume gains higher. However, further easing is not ruled out, but loss of 55 days moving average at 132.24 currently, and the more significant 132, 131.90 yesterday's lows would weaken the current structure and sideline the immediate bulls. So on the upside, break above yesterday's high at 133.65 to possibly focus 134.00, and a significant strong short-term barrier at 134.85, 24th, 29th February double top. On the daily chart, the studies have improved as MACD broke above the midline, and the strong momentum is seen now for possible extension towards our key barrier at 134.85, the highs of 24th and 29th of February 2012. The cable also cleared the recent congestion levels at just about 159. We have a series of peaks, 159.08, 159.13, 159.22 that were cleared yesterday on the strong rally of 158.00, where the yesterday's dip found support, and just ahead of last week's low at 157.69. A fresh rally higher reached so far 159.72, pardon, which is the equivalent to the high of, pardon, 1st of March, and just ahead of our next key barrier at 159.91, high of 29th of February 2012. Corrective action seen on overbought and extended studies on hourly chart is currently underway. Again, it's attempting through the initial dynamic support at 159.42, which marks 20 days moving average, ahead of more significant supports at 159.20, 159 zone, and also previous highs at 158.80, 158.70. So we have a quite strong support zone at these levels, and ideally, again, this should contain dips. However, further extension lower would not be ruled out at this point, despite quite strong posture on the 4-hour and improving studies on the daily chart, especially in light that the pair has regained again 200 days moving average, and yesterday's close above this level keeps the focus on the upside on the daily chart. It's important that 158 zone, yesterday's low, stays intact. Before this, it's 200 days moving average currently at 158.50. And holding above these two levels would keep the immediate structure positive for a possible test of our next strong barrier at 159.91, break of which would signal a break of the past 2 months range that is limited on the upside by 159.91 and on the downside by 156 base that was hit at 12th of March 2012. Only loss of 158, 157.70 would weaken the structure and turn the pair back to the range of from the beginning of February that the pair is moving recently. Dollar yen remains flat in past 2 days as bounce of fresh low of last Friday at 81.96, pardon, stays intact, stays capped actually by 83.00 previous range floor that offers quite a strong resistance for now. The studies are on the hourly neutral, also I would say on the daily, as on the 4-hour charts, as all the studies are in the pointing sideways as the pair remains within the sideways movements in past 2 days. To improve the current structure, we need to see break on the upside of 83.00 in order to resume recovery. However, the still weak outlook on the daily chart as a result of the recent pullback of 84.17. The studies came out of their extreme levels and still pointing lower. My signal stronger correction, as this is the strongest corrective action in past 2 months, rally from 76.00 base. Immediate support on the downside is the main bull trend line currently at 82.43. Ahead of a more significant 82.24, 23.6 Fibonacci retracement, and the low of last Friday at 81.96, which is the break point around 81.90 zone. In case of break lower, to open way for a more significant corrective action and open 81.00 as next Fibonacci level, 38.2%, and the higher platform at 80.55 on a break. On the upside, only break above 83 and regain of 83.50 is required to avert immediate downside risk and refocus 84 zone for retest. The dollar Swiss remains at the back foot after a short-term weakness of 93.33 high of 15th of March 2012. Finally broke below very strong support at 90.70 zone. That there were several attempts that stayed congested at this level. Yesterday's fresh weakness broke lower. So far testing a 90.20 our initial support ahead of 90.00 psychological support. Corrective action is now underway as the hourly studies started coming out of the oversold territory with immediate resistance, previous strong support now acting as strong resistance at 90.70 zone, where is also the 55 days exponential moving average on the hourly chart. And for the time being, this zone is expected to contain the corrective action, but further extension higher needs to break minimum 91.35, yesterday's high, in order to avert immediate downside risk. Otherwise, there is a potential of leaving a lower top under 91.35 for fresh extension lower, and loss of 90.00 psychological support to open way towards our key short-term support, double bottom of at 91.30, lows posted on 24th and 29th of February 2012. The gold remains in the strong recovery path after breaking a congestion at 1665 zone, where the initially recovery of 1628 low of last week was capped. Yesterday's fresh strength broke this level, so far testing just above 38.2% retracement of 1790 to 1628 down move. Hitting so far high at 1693. This was the high of yesterday, with the prospect of further extension higher as 4-hour studies are positive, but approaching the overbought zone. On the hourly, the studies already started pointing lower as a result of overbought conditions, with the slight correction seen facing a first support at 1684. That is 20 days moving average, ahead of static supports at previous range ceiling at 1669 zone. That is offering a good support for now, as the on 4-hour chart at 20 days exponential moving average is crossing above 55 days one at this level, and this gives additional boost for the current recovery of the yellow metal, and ideally should contain the corrective action. On the upside, we have the strong barrier at 1700 as a round figure, and the psychological resistance ahead of 50% retracement at 1709 and 1716, which is previous high of 12th of March 2012, and then another strong barrier at 1725, 1728, highs of 1st of March, and the 61.8% Fibonacci retracement. Basically, break of the later is required to confirm the bottom at 1628 and turn the short-term focus higher towards previous highs at 1790 and 1802. On the daily, studies are still negative despite regaining some momentum. That seems to be still short-lived. A break above 200 days moving average needs to sustain. Here in today's closing above, as yesterday's closure above 200 days moving average gives us a positive signal, but further improvement is needed on sustained break above here and regain of minimum 1700 psychological barrier in order to confirm the short-term bottom at 1629 and open way for a stronger recovery. And the previously mentioned levels says 1716 and 1725. Crude oil's short-term price action is still moving sideways within the range of 108.68 on the upside and around 104.30.50 on the downside. The recent recovery of 104.50 last week's low so far faces a strong barrier at just under 108 and remains in the sideways in the near term. The upside yesterday's and overnight's price action was limited at 107.30. However, studies are still holding some positive tone as more from fundamentals, recent shortage from Iran and the increased sanctions from Eurozone and the US and some Asian countries are going to put some more pressure on the oil market. As there will be more shortage from Iran as the main supplier of especially China and some other Asian countries. However, the stronger production is seen from Saudi Arabia, that is willing, what they announced last week, that are ready to increase the production towards the full capacity in order to cover any possible shortage. But according to the Saudi oil minister, there is no currently shortage in the market, and the supply of the oil in the markets is still higher than demand. But the time will show what is going to be. The prices are still supported by this current situation, especially that there were some shortages in supply from Sudan and Libya, and along with Iran, this gives quite good momentum for oil price to go higher. That was all for today. Have a nice day and good luck.